So where do you think we are right now in terms of adoption? Because whenever I go outside of the Bitcoin ecosystem and our Bitcoin events and conferences, I encounter people daily that are like, Bitcoin, I'm too late. It's this, it's going to be hacked by quantum. Like, what do you say to people and where do you think we are in terms of the cycle?
Yeah, it's kind of interesting. I was in New York yesterday, and I was speaking on a panel that was put together by Citadel Securities about digital assets. And one of my co-panelists asked the room. It was like about 450 people that are like some of the world's largest institutional investors that are clients of Citadel. And like we asked them, like he asked them, like how many people own Bitcoin? And I was shocked actually. The majority of the room owned Bitcoin, and those are very TradFi people. And then the same question was like, how many of you own ETH? Not that many. Like it was like, clearly at least half that, or if not a quarter of that. And then the next question was, how many of you have played with stablecoins? And it was like maybe a tenth of the room, if that. And then the next question was like, who bought like a meme coin or a token of any sort? And it was one guy. And so it's kind of flowing down. But almost everyone owned Bitcoin, which is kind of really interesting. It's and this is a room that, and the reason I'm mentioning that because this is a room that traditionally would have been very resistant to Bitcoin or be part of companies that would be very antagonistic to Bitcoin. And now the times have changed so profoundly. So I think, it's still early because to your point, if you ask most people in the street if they own Bitcoin, probably the vast majority still don't.
Yeah.
And that's exciting because if we have, it's still in the hundreds of millions, low hundreds of millions of unique holders, I think, at this point. So the upside is just so massive.
That's true. I mean, the people that do hold Bitcoin, though, a lot of them do not want to spend it. And so you focusing so much on the Lightning Network and the payments component, how important is liquidity? Like, do you encourage people to use Bitcoin? And, how do you, what's your value proposition for that when it's the best performing asset and everyone just wants to hoard it?
Yeah, so this is such a great question because this is also something that's misunderstood about the way that we build the product. So right now, you can, if you're not a SoFi bank account client, if you don't have a bank account with SoFi, you can actually go on SoFi, open a bank account, and have a checking account and have dollars. And then because now they're on the network, you can start sending money abroad using the Bitcoin network without ever knowing as a consumer that you're using the Bitcoin network. So you're sending a dollar balance to someone in Mexico again, and you don't know it's powered by Bitcoin, and it's all fades in the background. And we really believe that the internet freed information, and Bitcoin is going to free money. And like the internet, it's invisible. It's a concept, you understand it, but you're not thinking about the internet as a thing. You're just using it. And we think Bitcoin will be the same once all of the banks and the financial institutions and all of the endpoints that can move value are actually connected on the network. And that's what we're focused on, is like bringing all of these institutions to the network in a variety of different ways, depending on their capabilities, to reach every last point where money needs to go on the Bitcoin network.
So I had Matt Pines on my show recently, and one of the things he said is if Bitcoin is only a store of value, it has failed. Do you agree with that?
Yeah, I fully agree. Yeah. But I think we need to unpack that. It's like it needs to be a store of value for the network to be secure, trusted, and all of that. So it's a prerequisite step for it to become what Satoshi wanted it to be, which is everyday payments. Now, on the way to everyday payments, there are two ways to think about this. One is actually using Bitcoin, the unit of account, for everyday payments. I think we're far from that for the reasons we discussed. But I think using Bitcoin as a neutral settlement network and asset to move between fiat currencies and to move stablecoins, this is happening now. And in the next 5 years, it's going to become mainstream in a massive way. And I think it's going to start moving trillions of dollars of value every year on top of the Bitcoin network. And I think when that happens, Bitcoin will have fully entered its utility phase. And in some cases, people will start receiving and sending payment denominated in Bitcoin. And then, time will do its thing.
Okay, so 25 years from now, the year is 2050. describe to me how Bitcoin is being used. Are we able to peer-to-peer exchange? Is everything monitored and surveilled and sort of going through intermediaries that have built on top of Bitcoin, on top of, L2s? What does Bitcoin look like 25 years from now?
So it's actually all of these things. I think, the reality is you need both self-custody wallets that are fully trustless or as trustless as possible, with a unilateral exit to Bitcoin L1 so that you don't have like someone or some entity that you depend on to get your funds out if there's an issue. And that's one part of the thing. Then banks are still going to be around, or something that functions like a bank that is capable of lending. And if you need to lend, you have to have deposits. And so, that will still need to exist. And I think banks will still need to be regulated. And so if banks are regulated, then for them to move money on the network, they need to meet their compliance obligations. And the question is, how far out can we move the cursor in terms of getting the banks, the banking industry, the banking regulators and the payments regulators to start being comfortable for banks to start sending money to self-custody wallets up to certain limits? Have we solved portable ID so that you can have a self-custody wallet, but you can have a KYC token of sorts, where for transactions above a certain limit, you can receive those payments from banks and regulated financial institutions? All of these are problems that we collectively need to solve for the network to work to its max capacity and max utility. And I think we will. By then, it's just going to be, the same way that you have cash and accounts, you'll have different accounts, which will have different capabilities. And depending on where you are in the world, you'll always have an ability to have a store of balance with digital money in it, and Bitcoin will definitely be there, and either as an asset or as an underlying settlement network. And Bitcoin by then will have absolutely 100% won and become the internet of money, where all of the money in the world actually moves.
Well said. With everyone's mind on AI, is there an AI component to this, like the micropayments and AIs actually paying each other as well?
Yeah, for sure. For sure. Look, I think commerce interfaces are going to change. We're not going to have websites and apps with payment buttons. You're going to have a conversational interface, and you're going to ask your AI agent, hey, buy me some really cool Bitcoin earrings, and it's just going to go find them and buy them for you. And you're going to delegate an amount that the agent is going to be able to spend, and it's going to go and spend it. And of course, all of this needs to run on a real-time network that's decentralized. If I'm an AI today, if I'm an AI instance or agent, and you would ask me to choose whether I'd want to move value on top of a network that's controlled by humans or controlled by code, an AI will always pick the latter, which is Bitcoin. That's the thing. And so how do you make it actually move value for merchants, et cetera, in the actual currency that they need at the lowest cost in the most efficient way? And if you do that, Bitcoin then becomes also the settlement layer for AI agents.